The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, market days, and I am the fourth in line here, and great shows previous to this, and keep listening. We're going to have shows all day for you, and most importantly, this is the beginning of the week, so we like to look at the different indices and all the different time frames. Let's just look at this. The E-minis have made the S&P E-mini has gone to 2014 round number high, right there, the little doji high at on the 9th at 10 in the morning, and basically we've gone sideways. This should be the head formation that pulls back, and I don't think there's going to be that much of a pullback at this particular point. When we are looking at the momentum, suddenly I had this picture in my mind. I got the picture perfect. Now, how do I articulate it in words? Let me do this. It's not the way I planned to start off, but I think it's so important. When you have a takeoff phase, what do I mean by takeoff phase? Let me just jump. Actually, let me run the numbers. Dow's up 22 at 17,106. S&P is up 0.02 at 2014. The comp index is up 8 at 48.38. Gold is up 5. It was up much more before. I think it's getting a little bit tight. It acted really well coming off the bottom. Monthly chart still looks horrible, but the shorter term, the weekly chart is improving, and the daily chart is very good. So it's trading at 11.61. Silver's at 15.88, up about 6 cents. Platinum is up 9, and you've got copper now at 2.42. You've got crude oil at 48, down 80 cents, and you've got bonds up 26 at 157.23. Okay, now let me go through what I was talking about. I did discuss it last week. I need to just refresh it. Here we go. A takeoff phase, if I can just grab any old, no, not this one here. Oh, that's an important chart to look at. A daily one. Let me just look. Is this a daily 120-minute chart? Let me just grab any old daily, daily right there. All right, let's take that one, whatever it is. Oh, not that one. Too much information. Let's go to get that one away, and let's find another one. And the reason why I want to do this, two reasons actually. One is, let me see if this is a good one. Daily, where is that? I thought that was the one I wanted to look at. Yeah, this is perfect. A takeoff phase is where, you see that? Look, I've just got bars. I haven't got candles here. It doesn't matter. But you see the strength of this takeoff. When was it? October of last year? Most probably October of 2014. You see, even this one here, a little takeoff phase, it takes you to at least a D, A, B, C, C1, C2, and then a D. The takeoff phase in a buy mode in the daily chart is where there is such intense pressure to buy that you only get intraday. Remember my rule, I've been talking about it for about 2 weeks now, for a long time, but spending quite some time on it over the last 2 weeks. 136, meaning that in a bear phase or a bull phase, you don't want to see, you want speed. You don't want to see more than 1 day of consolidation for a peak or a trough. And you want to see that and then go on to a new high or a new low. If it's 3 days, that's fine. It isn't as good. Not to say you can't go as high, but it means you're starting to lose power, that very soon you're going to see the high bars shrink. But when you get this very intense intraday, remember, almost every day last week, there was a sharp pullback somewhere. Either it was in the futures early in the morning. At one point, we were down 13 in the futures or more. And I'm going to sneeze. Excuse me. And then what happened was intraday. It wasn't even 1 day. It was intraday. You got a move to the upside so that you got this kind of close. Look. And this is still leg D, but it looks really like an A coming from the low in the stochastic and the MACD. MACD deflected higher here, but from 15,942, look what you got. Strong, the low of the 29th of September. Strong candle, doji candle. Strong, doji. Strong, doji. Well, today we can't count, but doji on Friday. The fact that we've gone to 17,111, which is a point, I believe, a point above the 17,110 of Friday, is a positive sign. One of the reasons why we're just very selectively short. We're short on areas that have had spectacular moves to the upside and are deserving, not of a break to the downside, either they deserving of a rest or a complete pullback. So that's where I want to be short. I'm not sure that I'm looking to buy dips in the key indices. Why? Because this is, I sent out by this morning at 8:35 when I sent out my Traders Corner to my opening call, between Friday night when I started working on all the, Friday afternoon actually, when I started working on all the charts, till this morning, let me just check. I think I must have sent out, let me check here. Opening call, Chapman charts, there we go. So I must have sent out 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, I might have 14 or 15 charts. Now, I don't know if anybody has time to even look at 14 charts. I know I spent an incredible amount of time over the weekend posting, doing them very, very long. I mean, a lot of both notation in all the time frames, as well as discussing the daily, weekly, monthly, all these charts. Some of them were positive and some of them were negative. But most importantly, what I was looking at is that so many support levels in the key indices have held that my impression right now is that the Dow is the strongest with and that's so important. It's a complete change of thinking for me. The cyclicals have taken the baton and are leading. That's very different. Peak was a lot of charts over the weekend. And most importantly is that I think that there were very important charts to look at, very important to look at the different time frames to assess, to say, wait a minute, you might have a very bearish outlook, but we've made a low of some consideration on August the 24th. That makes the Dow low of 15,370, that whole 15,000, say 700 area to maybe 15,000, incredibly important support at this particular time. The S&P was the next one. No, the Qs were the next one in line for strength. Dow leads, Qs are next. Then comes the SPY. Then comes the New York Stock Exchange, and then the IWM. And we're looking at something that is a little different, because it's saying that we might get we've had the internal low. We might get that residual low that has the Dow holding beautifully, but the other indices test and break the October 14th low if they haven't already, or they go lower. That's the way it looks. And basically what that's saying is that perhaps, and I have to add perhaps in italics, why? Perhaps we have seen something that is going to represent, I don't know how to get this all in. Let me think it through here. There are a bunch of things I want to talk. I want to talk about the Chapman Wave Trends Watch as well. Can I do that in this time? Probably not. So let me do this. It says to me that the mega move could still be unfolding. And that mega move says a coda could be coming. I'm going to do this. I hope this can, can I get this? There it is. So why do I jump to this out of the blue? Why do I show a Lamborghini and an Audi R8 Spider right behind it? This is a front page article in Sunday's Boston Globe. And it's about the foreign students. Now it's not from the Middle East, it's from China. that have taken the lead in buying these cars. Now, when you go to Boston University area downtown, not exactly down to the financial area, but towards the Boston University, Kenmore Square, Back Bay area, you will see these cars all the time. I've spoken about this for ages, but this is different. The prices of the cars and the sex appeal of the cars, and the irony here is that I'm now seeing, and I've been looking at this since I was like a preteen. I've been always look at. I just love design and just the whole aspect of cars. There's a generation now that's not perhaps it's not as important as it had been for 100 years or 80 years. But I'm now seeing something very different. I'm seeing women drive cars that were really the purview always of males. It's just, that's the way it is. This has got nothing. This is to do with the facts. It's got nothing to do with sexism or anything. It's just the way it is. And what's most importantly is that I'm seeing it now, not in the youth, not in these people that are coming here and basically investing or showing off the money. I'm seeing it all over the show. I counted over the weekend, just kind of casually, there must have been 3 Bentley convertibles and the very big Bentley and a Rolls that just were kind of driving along. I mean, they were just there, okay? Now, I don't add these things up. They sit at the back of my mind, and they become really, really important to me because it's part of an era, especially here in New England. You know, here in New England, you used to have Peter Lynch, one of the really wealthy fund managers who did everything right, was just a spectacular fund manager. He used to go to work in his, I don't remember what it was, let's call it a 1965 Chevy. It was really a very old car that he loved, and that's what he did. It was this New England modesty. You just didn't show your wealth. There is something so different now. Houses around here that are just being knocked down and being built in a very short time. And I'm sure they're kind of well built. I don't see how they can be really, really well built in the short period that they're being built. But anyway, the fact is they're being priced at humongous levels, and they're being snapped up before the construction sign is out with the realtor sign on. It's already sold. Not always, but a lot of times. Now, that just might be in the Northeast. This just might be this particular area, Boston area, the northern suburbs, the western suburbs. But no, I've seen it when I've been to New York. I've seen it on the East. I am talking about the East, but I'm hearing about it in other areas of the region. So let me go back to the chart, because all of this pertains. I don't like to ever talk about these things as if they're in isolation. And one of the things that I'm looking at here is that there is a period, and I've spoken about this for 1.5 to 2 years, that is so similar to the late 1920s, and the result doesn't have to be the same. I'm saying that the period is very similar. And that's why we have to be somewhat careful in the assessment, what we're doing, in our allocation of money, etc. I'll be back with this chart because it's really important very soon. Basil Chapman, 2015 SP.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. So, because I really do want to get back to the stock charts and all that stuff. That's really important for right now. All this philosophy stuff is, it's interesting. But do I buy? Do I sell? You remember the trumpet question? So here we go. The question in the general statement in the gen was, Mr. Bull says, Basil, do you still update your long-term Dow Jones Industrial Average for approximately the 7-year periods? Absolutely. And with your cultural ideas, absolutely. And I do that in my newsletter all the time. The other thing is, are we in an age of conspicuous consumption? More than that, it has gone to the, I talk about the period of excessivity. I actually spoke about it in that book, in that chapter that I had this one chapter in the, what is it called again? The Psychology of Investing, published by Wiley. And I talked about excessivity, a word I made up back in 1987, 86, 87, 88 period. And there's no question about it. We're in a period of excessivity, and it's a very interesting thing because these periods invariably, if you think of a pendulum swinging from the left to the right, invariably you're going to swing back to at least the middle. So we haven't yet started the swing to the middle yet, and I suspect we will. So in the meantime, look at this chart. Remember the takeoff period that I said, intraday pullback, but you close either unchanged at worst, and at best a new recovery high. Well, that's exactly, we've even done that today. We've made a recovery high in the Dow. And this is very important because the MACDs, look how strong it is. Look at the stochastic at 96%. I did not want to do anything on the short side other than specific stocks. And even then we have a tight, 1.5%, 2% stop. Because in this particular market, if the tide is going up at this particular stage, right now, this is the shorter term, I'm not yet talking intermediate term, then what we're looking at is that the majority of stocks, even if they are shorts, won't go down as much as you think, unless there's just real bad news. And we've got news coming out today on all these different stocks. Earnings reports coming out today and tomorrow, and the whole week are tremendous, very important stocks. So let me go back. So this has the characteristic of a single leg A, but it happens to be D. That's saying to me something here is different. The actual chart pattern, that rectangle that I often talk about, something is different here because we've made two cup formations that have overpowered the arch formation at this particular point. Now we've got a higher level because we're above the 16,933 level in the Dow. That says to me that the 9-period moving average, this maroon level here at 16,800, let's call it 800, is going to be very strong support and should actually hold the price, at least initially, if there's any bad news that comes out. Now, if there's an event that creates a sell-off, that makes this even more important, because if we close above that through this, whatever event it is, that's going to be important. Nothing here to see. Yep, there is something to see. I have a signal that says that the Dow should be down early tomorrow morning. So that signal's flashing. So I had a question about Facebook. Okay, Facebook is one of the stocks right now I think that I think fund managers are going to find desirable. It's in the category that's held very well. This on a technical basis, 96s is 94.21 up 97 cents. I think the 96 is going to be tough resistance. If it snaps through that, then it can go into the next candle, which is at, well, then you can test the high, the all-time high of 99.24. But any weakness this week has to hold 93 to 92 support. That's the area, key support. Okay, so that's Facebook. Now let's do some other things. I wanted to show you the TLT moving up like this, up 1.10 at 123.38, when the general market, the bias is not very, I mean, how can you call this negative? The S&P is up 50 cents now, Dow's now up 33 cents. I'm sorry, this to me looks like really good action. Now, what I spend a lot of time on, my question here is, market moving up says that the bonds could consolidate a little more within this trading range I'm circling here. It could come down to, well, 122.10 is the 200-period moving average in the daily. I suspect, and 122.09 is in the weekly, the 9-period moving average. I suspect that if the bonds start to pull back and the TLT, the Lehman 20-year T-bond fund, actually takes out this low of the 23rd of September of 120.99, that's going to really be a boost for the general market. What I think is happening here is we're having, right now, there's a kind of oh, good point, Mr. Bull, TLT affected by bank holiday. That's right. I wonder. Yeah, maybe it is. That's a good point. But whatever it is being affected to the positive side. And that's saying that's very interesting because it should put some, just short term, it should put a little bit of a cap on the market. So this is what I'm looking at here. The TLT trading range, no problem there. The Japanization of our bond yields, I think that's just going to continue for a while longer. But most importantly, when I'm looking at a Ford acting so nicely and a GM acting so well, we got to...
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So I thought it would be important right now to look at some of the key indices. And look at this. The GLD, this is using the Chapman Wave projection tools, has very strong resistance between 100, it was between 110.96 and 11.37, then it went up to 11.96. The high today is 111.73, and then it has support at 109.10. That's in the 120-minute chart. The 10-minute chart has support at 111.10 to 110.86. So we're in that area right now and didn't have any resistance for that big spike. So now I have to look at the daily, and the daily says the 112.67, 112.56, and 113.04. That is very strong. When I see 3 upside resistance areas or support levels, I take it seriously. And in this particular instance, the weekly chart is 113.66. So it's saying to me, go to your chart and see what's happening in the GLD in your 4 time frames. And if I go to that, tap over there, go to that, I'm looking at leg D. With the fact that we've gotten this high makes the 112.16 200-period exponential moving average more of a magnet than a repellent line, even though it's a D. But at the same time, you've got trend line support, which is right where we are at this point at 112.20 to maybe 111.18. Right. Now, when I look at the weekly chart, nothing's changed in looking at the H that goes to an M pattern yet. It will if, in fact, there's a move in the GLD towards the 112.75 to 113.27 area. But in the meantime, back at the ranch, what we've got is the high that was made at 112.12 on the 28th, the week of the 28th of September. That's the level, that's resistance in there. So that kind of corresponds to what we were looking at. If I look at the 120-minute, I never updated, made a peak F, then it starts a new one, A, B, C, D, and then it goes A, B, C. So that's F, G/C. So this is a G that could be a little bit more of a pop-up, but we're getting close to an area that should be strong resistance. So the GLD is saying, fabulous move, up from the recent lows, not as great as the one that occurred into August, late August, but this is good, and it's starting to impact positively the monthly chart because it's bumping up against the 9-period moving average, but it really will take the weekly chart, not even the daily chart. It needs the weekly chart to go into the 112.30 area or higher, and then hold on a closing basis Friday to say, aha, now there is a chance that gold could have, and some of the gold stocks are indicating this could happen, but this is what I'm looking at just purely on the GLD chart. If I look at the gold chart itself, much of it coincides, except for the fact that it's only in leg C up in the daily, and that suggests strongly that there might be a little bit of a pullback and then a pop to the 1170 area, which is the 1170, could even be 1177, which is the 200-period EMA, and then the higher ones, the SMA. So that says to me that gold has the potential, and this is an E to an F, possibly in the 120-minute chart, there's the potential to hold 1145, the 9-period moving average, on any pullback. Let's say 1145 to 1140. You can even go to 1138 without changing the uptrend. A close below 1138 is something very different. A weekly close below 1138. So in the meantime, that was very important for me, just to take a little moment to say that the stocks have done a lot better than the actual price of gold. Gold is not above the 1169.80 high that was made on the 24th of August, but it has gone to 1168.60, a point and 20 cents lower. And that says it's getting closer to the 200-period exponential moving average, which makes that level more of a magnet than a repellent. Before it was a repellent, now it's becoming more like a magnet. And that says that even if it goes above into the 177 or higher area, that would make the 1170 still a magnet for testing, but this time as support rather than as testing as a repellent target line. Okay, the GDX, people have been talking about GDX, and of course GDX has a different pattern. This one, A, B, this should be C, sorry, this should be a C right here. So it's in leg C, just like the gold contract, but the weekly chart, and this is the thing that's impressed me the most, the weekly chart has a slightly different, not technical picture, because the technical picture before in that spiral up to from the low of the week of the 7th of November at 1645 to the high that was made on the 23rd of January, that was 14, the high that was made in January, week of the 23rd, 2015, that besides being a fabulous point move, I mean, going from 1645 to 2322, I would say a 6.5 point move to the upside is a pretty darn good move for, what is that, about a 50, about a 42% something move. Hey, that's pretty good. And then it fails and it comes back, does the H pattern that goes to an M pattern, fails. See how quickly it went A, B, C, D. I mentioned that's not a good sign. Then we plunged and we didn't do the one-to-one to the downside. Oh, it's close, but it's not exactly a one-to-one, if that would be the base level to take it from. But we went to 1262. So now it's 16. It's still up 3.5 points. Hey, that's 22, what is it, 23% or something? Nice move to the upside. Now it needs a little bit of a rest. And that's really what we're looking at. But I am impressed with gold acting as it has. I'm impressed with the fact that there's this little candle. I'm impressed with the fact that if I look at the XAU, you remember we did this on Friday? The XAU, I'm not even sure I finished my thought process because we had callers coming in. Look, the exact left side, right side price time match to the candle of Trough D in May of 2012 takes you to, was that July? Yep, July, and July's low was 45.74. The September 2000, wait a minute, whoa. Oh, and the low that we're coming from is right here. From the November of 2000 low. That was the big takeoff point at 41.88. So we've given, that is incredible. I've never thought about that. We have given back in the XAU, we have, up until that was this past month, when you went to 42.72, you came within less than a point of the low that was established. I remember when I got that major buy signal in the XAU at 44. Unbelievable. It went to 200. Oh, I spoke about this on Friday. It went to 209 in March of 2008, plunged to October of 2008 to 63, and then ran up to a higher high of 232.72 in December of 2010, and then kaplop. It came down to the 42. I should punch that in. I think I'll do that now. I'd like to know. So what we're looking at here is question I'm going to have is what percentage? And if I go to my percentage, I'm going to go right now because I'd like to know. I mean, that to me is a crash. That's like the Nasdaq fell. So we went from 232, let's round it out, to 42, and the percentage happens to be 81%. So the Nasdaq QQQ series plunged from 120.50 in March of 2000 to 19.76. Did I ever put that in? Yes, I did, but I put it in another chart. So that's 120.50 to 19.76, 19.76, and lo and behold, that is 83%. Oh my. Minus 83.6. We'll put the 0.6 in after all. That's what it is. 0.6%. But we've gone from 1976 to the high of October of 2007, and I should put that in right there, 54.70 in October of 2007 to 2054.70. Now, isn't this interesting? And the reason why I love to do these things, 2007, is because it gives you a sense of proportionality. It gives you a sense of downside and upside. And look what we're doing here. We're looking at it going from 25 to 114. And that 25, let's just round it out because I want to do this real quickly, 25 to 114 on the upside is in fact 356%. Wow. 350, it always sounds much greater on the upside, doesn't it? 356%, that's pretty darn good. So I want you to just show certain things that have been happening. I want you to show that the candle in the monthly chart of the QQQ series, if you take out that August 84.74, that's the price. We have to deal with the price, but I think that's an aberration. Something's, to be practical, I suspect that it's really 92, but anyway, it was exacerbated by the selling, and that's the price. Now look at this. When you're looking at the upside, we're back above the 9-period moving average. When I went through these charts this weekend, I said, okay, you have to shove aside any bias you have of longs or shorts, whatever it is. You got to even set aside your bias that anything to do with the healthcare, pharmacy, biotech, insurance, whatever it is, it's going to be weak. Just put it aside, look at the chart and say to yourself, what is happening. And what is happening is that there's a price that's held very well. If I was just looking at the technicals and you said the high of the QQQ series at 114.39 3.5 months ago, where do you think we would be? I would say, oh man, we should be at 96, 97, or even lower. We should be under the 9-period moving average. No, we're at 106.93. So when I set that aside and I said, okay, look at the charts, try to be as rational, try to look at the charts in as objective a way as possible. Look at the technicals as you always use them. Would you buy or would you sell in every time frame? Just that's all you need to do. And the reality was that my bias started to shift to say, hey, wait a minute, that really could have been an internal low in the Dow with a residual low that could be higher. But we might see enough negativity come along to really smack some of the other indices down. And that's where you would get the residual low as some of the cyclicals are just, is GE going to go back to, what's going to take GE? Why did it jump there? What's going to take GE down to 19.37, the low of August the 24th? I don't know. It's had all the bad news thrown in it. It's got good news coming out. The monthly chart is a point of how much? 28.68 is the high, the last high. Going above it puts you into the 2008 September 2008 level, which had a high of 29.28, and the 200-period moving average right at that point was at 20. Where did it go? 27 something, 27.55 in the 50s. Okay, 27.50s. So, and right now the EMA is at 24. So it's saying that on a purely technical basis, there is still upside left in GE, and then on a downside basis, there's tremendous support at 25.90s to 25. Let's call it the whole 25 area. For GE, if there's a real bad news event, what would take it below? What would take it back into, say, 23? It's 5 points down. It made a quick 5 points up, so you can get this Eiffel Tower straight up, straight down. But if GE is going to plunge 5 points, then you've got to anticipate that the Dow will push down at least 500 points. That's my thinking. That's the way it should work. So at this particular point, my bias is leaning towards the short to a little bit, maybe more the intermediate term of sustaining the up move to sideways to up. And at some point, I think there's just going to be we're going to get slammed by bad news. And that bad news is going to be such that that's the big test for the market. And all I can say is that at any point, if the Dow takes out its low of 15,370, closes under that for more than 1 week, I have to consider that this is going to be a far longer and a far more serious, without a V-shaped reversal within a day or two of making that level, it's going to be far longer and far more serious. And at this point, I don't know if I see it. And that just takes me back to my Transmart section, automobiles and all that stuff that's going on, housing. And it seems to me that there's another big spiral to the upside coming at some point. That's just my thinking. Technically, all I can say is that GE is say, if I look at this GE chart, for me, it's a bellwether short term in the Dow. That's really good action. Really, really good action. All right, enough for that. IYT. This is important. The transportation average led the market down. It's rebounding some, but at 147 in the IYT, the iShares transportation average, it needs to go much higher. We'll talk about that when I get back.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. We're back, and we're going to go straight to Ben in Tallahassee, who I tried to call on Friday and got dropped because I was talking too much. Ben, how are you?
Very good, Basil. Thanks for taking my call.
My pleasure.
IBB. I mean, do you think this looks like a perfect time or not? I'm looking at I can see why you might want to hang on to it from a 120-minute chart because of it. You know, the stochastic looks good, and at 324 looks like it might be on radar. But boy, as soon as you go to the daily or the weekly, it looks pathetic.
So,
and of course, I'm looking at the ultimately the BIS.
Correct. So let's do this. The IBB is the iShares NASDAQ Biotech ETF. I've got a down candle in the monthly chart. That suggests that not only do you have a sell signal, but a sell mode. And that also, in this particular instance, says that the major 209-period moving average in the monthly is at 329. is trading at 310 right now, up $1.70, and the weekly chart is also in a sell mode. And I see no reason why for subscribers to change the short position from 390 310 at this particular time. Now, on a shorter term basis, I did say for subscribers this morning, I typed in, there was just so much that I did. I couldn't even tell you how many hours I spent over the weekend and on this morning and last night. But I did type one thing in, and I said for BIS, that was number 6 out of the 21 I had listed.
Yeah, I'm still up. I am a subscriber, and that was another reason I was calling, because it just says start at the end, correct?
Right. So now, and subscribers know, I always send out this, it's called Reading the Trader's Corner. I send it out periodically for new subscribers. Basically, unless I am absolutely clear that you're going to buy or sell at this particular level with a stop, which is usually 2-3%, unless the specifications are exactly there, we should know by now that you don't do anything. I just forgot. I usually put a little plus sign next to something that I haven't finished that I'm going to come back to. I just forgot to put the plus sign, and I forgot to say what I wanted to say was to start. Actually, I didn't even finish the sentence. I wanted to say starting to look for a short, for a long, and that means that we've done nothing right now. So I'm looking at the IBB, and I'm thinking from the 120-minute chart that the failure to act or react up until now, and I don't mean 1 point or 2 point, usually it's a 7 or an 8-point mover if it's starting to move strongly up or down. I think that if it gets to the 3, we might miss it adding to the short position. I would much rather be shorting a bounce towards the 313, 315 area, assess it there, and say, okay, now I can put a 3-point or a 2-point stop, or 1%, maybe not even a 2%, but a 1.5%. So I'm saying hold off for now, have patience. If you didn't get anything, if you've not been short the IBB for just recently, just be careful, because being impatient puts you at risk, because it's got the pattern that says the H can go to an M, and the M can continue and become a rectangle, and it can just do this for a while. So I want to rather short when it's going towards the high, that peak A at 321, was it? Yeah, 323, somewhere there. Within 4 or 5 points, maybe there. I might wait if I can. Or if it starts to make the H pattern, but way before it gets to the 290, because 285, that area has been tremendous support before. So have patience. It's on my watch list.
So you do feel confident you're definitely biased toward it going higher.
No, I'm biased towards it going lower, but the ideal risk-reward is that I don't want to buy it closer to the lows. I'd rather buy it, the recent lows, I'd rather buy it shorted. I don't want to short it.
I understand. I mean, it was close to his 312 and change today.
I know, 312. I might even have put it in if I thought it was going to bounce that much. I'd actually prefer another bounce if we can get to the 317s to look at it. Have patience. I hope we'll get it. We should.
Thanks.
Thanks, Ben. Basil Chapman, stay tuned. For everybody else, check out my opening call. I think you'll find it.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.